All right, YouTube, here's the third video in the asset overview series. We're going to be going over commodities. Let me adjust the camera here. There we go, get a good angle. Commodities are representing pretty much anything that you can hold in your hand. The investment community, there's a lot of commodities. Gold and silver are the biggest ones. I'm going to touch on why in this video, but anything is a commodity that is something that you can see. This mattress that I'm sitting on is a commodity. That couch over there is a commodity. An egg is a commodity, right? So it's anything that has tangible use to it is considered a commodity. Now, not all of these commodities, there's no egg ETF on the stock, at least it's not a very popular investment if there is one, but there's no commodity index that's directly tradable for everything. There are for certain commodities. You can buy an ETF to track the price of oil. You can buy an ETF to track the price of uranium, gold, silver, wheat. I mean, some of them aren't really investable commodities, more so commodities that are a function of a business that you sell onto the open market and you make a profit. But essentially, that's all that a commodity is. And now, this isn't the end of the video. So what investable commodities are and why you should own certain ones are commodities that are physical and tangible in the real world that actually have a use case for you. And the biggest investable commodity is gold and silver. You might be asking why. And that has more to do with us as human beings than it does the tangible use cases of them. At some point between today and the dawn of the dinosaurs, human beings decided that we were going to trade between each other. And there's a lot of instances of this in history and in nature, even, of ecosystems of trade and mutual transactions. But ultimately, it became very tedious for two people to trade their silver and wheat with one another. Or I guess that's a bad example, to trade their tin ore and wheat with one another. It became very tiresome to do. Generally, there was a consensus on how much of something was worth something, but ultimately, we aren't going to weigh these commodities out against one another to decide what is worth what in the open market. So money or currency was invented to act as a medium of exchange between two objects, essentially. And for the longest time before we had technology, that was gold and silver. Since World War II, we've pretty much gone on and off of using gold and silver as money, and it's not realistic to go to the store and pay for things with gold and silver coins. They're tiresome and cumbersome to carry around. So we've essentially replaced gold and silver coins with transactions to facilitate transactions with paper notes. And on the surface, it's not that big of a deal because ultimately it's a lot easier to carry around a piece of paper with a number on it representing the purchasing power than it is to carry around a fistful of silver coins to pay for the things that you want to pay for. So eventually we transitioned out of using physical gold and silver and we began using paper notes as currency. However, it's not reasonable to assume that your piece of paper with the number 100 printed on it is going to have any inherent value. If anything, it only is meant to represent a trusted medium of exchange. And that's why countries are usually the ones to facilitate these pieces of paper, because it's the ecosystem within a country that essentially gives that currency its value. However, when times get tough and people stop trusting their governments with the responsibility of managing the currency, because generally if you let somebody control that type of transactional flow, they can use it for things that aren't necessarily in the greater good's best interest. I mean, all it takes is a few people to manage a currency, and there's only a few bad actors required to abuse that. So ultimately, even though gold and silver has been cumbersome to use in direct transaction, throughout history we have generally used a commodity like gold, which is not easy to get. You have to go into the ground and mine it, which is your proof of work to prove that you have gone and done some form of work to get the gold out of the ground, refine it into a recognizable form, yada, yada, yada. But ultimately, that gold is kept in a bank, and then a paper currency is circulated to represent that the value of that currency, right? So you're not going to carry around a gold coin, but a piece of paper that's representative of a commodity that actually does have value does work, which is why we have gone on and off of using gold, which is the prime commodity throughout history, to facilitate transactions. And it works because it has some inherent value to it, because it's shiny and nice and we like looking at it. And ultimately, very recently, we've started to find some industrial applications for gold and silver, but ultimately, they were shiny rocks that people just liked having and looking. I mean, come on, we're human beings. You know what clout looks like when you see one. You want something like, you know, something isn't valuable, but it's valuable to you in a certain collective of people. And then when those people come and take a look at what you have, they think it's pretty awesome that you have it. They kind of want it for themselves, even though it doesn't really do anything. That's what gold has symbolized throughout human history. And ultimately, gold is nothing more than a commodity in that sense. But it's a commodity that people have agreed that has value. And even though it's cumbersome to directly trade with one another, it's still representative of value. And most of the currencies throughout history are a derivative of the value of gold. Now, gold isn't the only commodity. Silver is also a commodity that's been used in transactions. It's a lot more common than gold, but which is good because there's a lot of people on the planet. So not everybody can transact directly with gold. Sometimes they transact directly with silver. But when you have the paper currency that is derivative of the value of gold, it becomes a lot easier for everybody to use gold as a primary means of a medium of exchange. Now, the thing about using eggs as a commodity, you could totally use eggs to facilitate transactions, but it's not reasonable that you're going to keep eggs in a bank and then have a piece of paper representative of the value of your egg. And furthermore, eggs aren't necessarily something that you're going to take in a bag to the supermarket and trade. It's not reasonable, right? But if it wasn't so cumbersome to trade directly with eggs, eggs could 100% be a medium of exchange because everybody needs eggs. They've got a lot of good fatty acids in them. They're a very healthy option for your diet. There's not a single person on the planet that wouldn't derive value from an egg. So even though you can't directly invest into an egg, it's a very prime example of what a commodity would look like as far as an asset class is concerned. Oil is another amazing example of a commodity. Now, it's a less reasonable for you to directly have oil in your garage in a barrel to represent value, but it is valuable because it's essentially energy, and you can transition with the proper equipment and technology. You can transition that oil into energy, and everybody uses energy. If you have a light on in your home right now, you're using oil as a commodity. Much like an egg, everybody needs electricity. So that essentially is what a commodity is. It's a physical object that other human beings will derive value from. Reasonably, though, investing directly into these commodities isn't a good long-term strategy unless you have some sort of insider information on what those markets are going to look like. You're not buying an oil ETF to track the price of oil unless you think oil is going to go up. And since oil is constantly being taken out of the ground, and the more oil that's taken out of the ground, the cheaper electricity becomes, it's generally not an idea to hold on to oil assuming that the price of oil is going to go up. Now, there is a lot of overlap with other asset classes, such as stocks, where commodities are essential. You can buy a paper asset representative of a company, so a stock in a company that mines oil out of the ground. The price of oil and what it's doing at any given moment will affect the profit that company is able to generate, which is reflected on the paper asset side of it. But ultimately, they are still a company that deals with the trade of a commodity. Why that's important is because, like I said, when it comes to commodity, there's a lot of overlap. Gold can go up or down in price, but generally when it does that, the companies that mine the gold have a lot to gain from the price of oil going up, the gold mining companies have a lot to gain from the price of gold going up as opposed to the price of gold going down. Farmers also, in a way, a chicken farm that have a lot of chickens that lay a lot of eggs, therefore they sell their eggs. You might think that it's a good idea for the price of eggs to go up, that it would be directly beneficial for that farm to see the price of eggs go up, but not necessarily, because with commodities, more so than any other asset, supply and demand is a massive factor. If there is a not that large a demand for eggs because the price of eggs is shot up too high, people will stop buying eggs. So generally, when the price of eggs go down, it's not good for the business. But when the price of eggs go up, it's not that good for the business either, because that means there's going to be less people buying the eggs, unless you can guarantee that all of your eggs are going to be sold no matter what, which is not the case because there is no monopoly on eggs as the only food source. If eggs shoot to the moon, then people will generally try and buy a different type of food. It's important to understand why certain commodities are investable and why they aren't. Now, as far as gold and silver is concerned, I've mentioned, I believe, in my introduction channel why you should own physical gold and silver, or maybe not necessarily physical. There's ETFs that track the price that you can have in your portfolio as well. But since you're not physically holding the gold and silver in your hand and you instead have a paper asset derivative of that commodity, it's technically a paper asset that just tracks the commodity price. So take that for what you will. Ultimately, gold and silver are the only reasonable investable commodities. And, well, not the only reasonable investable commodities, but for long-term investing sake, yes, they are. And the reason for that is because they are time-tested and proven as a store of value and a medium of exchange throughout history. You can go back to the ancient Greeks. They traded with gold and silver with one another, and eventually it got to the point where, they decided that they didn't want to, I should say that when paper was invented, gold was kept in vaults instead of traded directly, and, because it's a lot easier to hand paper with one another than it is gold in the vault. However, there's nothing stopping from the people handing out the pieces of paper that represent the value of gold to say, okay, well, this piece of paper now represents this value as per gold as opposed to it did before. And that's what's called inflation. And that goes all the way back to ancient Greek times, where they mixed their gold coins with copper to dilute the purity of them, or they would just stamp a new number on top of the old gold coin. And essentially, they would put their own currency in place of gold and silver that they could manipulate a lot easier than gold, because gold you have to take out of the ground and refine it. It's not really cheesable in that sense. Sorry, I'm a gamer. The terminology comes out. But in a way, pure gold and silver is the only commodity that is worldly recognized as an inherent store of value because of history. You go back thousands and thousands of years. There's not a lot of assets like that go back thousands of years that you can trace back to the dawn of civilization that will hold their value. And because of that, it's a good hedge against currency manipulations from governments, because when it's as easy as typing in numbers on a screen like we have today, it's very easy to abuse that privilege of printing your own currency, which is why holding a commodity that is representative of money throughout history, gold and silver, might be in your best interest to do so, which is why it's a very popular investment vehicle. And as a matter of fact, gold as an asset is the highest market cap of any asset in the world, which means you take any company, you take any bond, any market whatsoever, if you put it all together, you add up all of the money in all, like for example, Apple, all of the Apple stock, I think, I'm not sure what it is, somewhere around the $2 trillion mark. It goes up and down, but it's in the trillions. Gold is the highest market cap asset in the world, which means that it is the most stable, well, not stable, it's the most widely recognized asset in the world, I should say that, which means it's the most invested into asset in the world. That's what I should say. And it has the most faith to remain that way because it's time tested throughout history. Essentially, it's the only commodity, apart from silver, which directly correlates to hard money itself, money that can't be manipulated by any central authority. And that is very, very important in today's day and age, because money is just on a screen. The money that we use to transact is only as good as the people who can spend that money. Because, well, based on my description, you might think that, well, wheat to oil, for example, is going to be whatever wheat is versus whatever oil is. It's going to be the supply-demand metric graphs on both sides. But ultimately, if I control the paper currency and everybody agrees that the paper currency is what we're using, I can print up my own currency and buy up all of the oil regardless of what the price is, if we all agree that the currency that we use is our medium of exchange. And it's very important since I'm not directly trading oil for wheat. I use that currency as an intermediary for the ease of business sake because, like I said, otherwise you'd have to bust out scales, and that's not reasonable. However, because of that extra step, it becomes manipulatable. Gold is not manipulatable in the sense that it's a commodity just like everything else. Oil to gold to wheat is going to be just as effective as oil to wheat because gold can't be manipulated. It's going to be, if I'm selling my oil for gold and then selling the amount of gold I get for wheat, well, then I'm buying and selling the gold in the same transaction. Ultimately, the price should stay the same. But if I can just create currency out of thin air and spend it on whatever I want, I can do that not only to buy up all of a certain commodity regardless of what the price is if I have unlimited currency, but also completely distorts the prices after I've already bought my commodity. As in, like, I can own all of the oil and then the price of oil only goes up after I've already bought it all because the currency is only freshly being spent into circulation. Now I'm getting into currency as opposed to commodities, but it's very important because commodities have represented a stable source of a medium of exchange for transactions. And every single time that a government steps away from using a commodity and begins using a currency, it makes business very, very easy in the short term. But in the long term, those systems always get abused, and we always end up swinging right back to wanting to use a commodity as money again, which is why commodities are very important to own. Because ultimately, if history is any indicator, when currencies fail, we will revert back to gold and silver. We do it every single time, which is to say, you kind of want to own some. Not necessarily gold and silver, but commodities in general. Chickens are a commodity. They're a commodity laying commodity. You know, if you have enough commodities in your own home, you don't need money at all. If you have chickens that lay the eggs and you have a garden that feeds you the vegetables, a garden would be a commodity. And I mean, like, a river could be considered a commodity because it's a resource. You could put a wheel there, it'll generate you electricity. The river itself would be considered a commodity. The land that the river is on would be considered real estate. And the easiest way to understand that in your head is a river can be diverted away off of your property without influencing your real estate, but you would be losing the commodity. So ultimately, yeah, anything tangible would be considered a commodity. And if you have enough and a diverse enough array of commodities at your disposal, you completely negate the need to conduct business with other counterparties entirely. In other words, you become entirely self-sustaining if you get the commodity aspect of investing right. So in a way, I'm not telling you to invest into eggs on the stock market, but if you were to invest into a chicken and you constantly had a supply of your own eggs, then you completely remove your need to buy that commodity, such as food, for yourself in the open market. Like I said, the whole name of the game is to reduce expenses and increase income. And guess what? If you have a commodity that reduces your expenses, that's a pretty good investment. Even if it's not increasing the amount of money that you have in your pocket, it's reducing the amount of money that you need to spend out of your pocket in order to live. And like I said, that is the whole point. Reduce expenses, increase income. Chickens are really good at reducing expenses. Now, granted, like I said, a lot of these overlap. So I can invest into gold, or I can invest into a gold stock. I can invest into a chicken, or I can invest into a stock of a farm, right? So ultimately, it depends on how you go about it. And also, I'm not going to hold a chicken coop in my apartment in the middle of a metropolitan city. Generally, I need real estate that can facilitate certain commodities, such as having a chicken. But all of this to say, people should probably value chickens as an asset more than they value certain stocks. So, like I said, this is a critical thinking channel, and I'm telling you, certain commodities are something that you want to have access to in your portfolio. Anyway, I'll take care, guys. I'll see you in the next one.